Hey traders, welcome back to the Modest Money channel. Today, I'm diving into a topic that investors on the lookout for the top research tools should be aware of: Seeking Alpha versus Simply Wall Street. These two platforms are some of the biggest names when it comes to helping people like you and me make smarter investment decisions. But which one is the better fit for your needs? If you've ever wondered which tool can give you the edge you're looking for, stick around because I've got you covered. By the end of this video, you should know which one, if either, is a better fit for your investment research needs. I've used both of these platforms, and let me tell you, they're different in what they offer, but both have their strong points. My goal today is to walk you through the key aspects of each, share what sets them apart, and help you figure out which one might work better for your investment strategy. Whether you're chasing market-beating returns, need easy-to-digest visuals, or just want to know what other users think, these platforms can help. Let's start with Seeking Alpha. This platform has been around for a while, since 2004 to be specific, and it's well known for its quantitative tools, massive article library, and community-driven insights. The standout for me has always been the Quant Ratings system. Seeking Alpha's strong buy picks have an impressive track record, averaging a 26% return, outpacing the S&P 500 by a wide margin. To me, that's clearly a big deal if you're looking to gain a serious advantage in your portfolio. On top of that, Seeking Alpha has a fantastic community of contributors, from everyday investors to professionals, sharing their analysis on thousands of stocks. You can interact, comment, and even challenge their viewpoints. It really makes your research more dynamic and allows for a more well-rounded view. Being able to read about contrarian viewpoints takes my research to the next level. Now, on to Simply Wall Street. What I think really sets this platform apart is how it turns complex financial data into beautiful, easy-to-understand visuals. Their Snowflake Analysis is genius. It summarizes a company's valuation, growth potential, past performance, and more in a simple graphic. For me, this is awesome because it saves so much time compared to digging through financial statements. It's also a fantastic tool if you're newer to investing or just don't have the time to go deep into the weeds of stock analysis. And let's be honest, sometimes visuals just make everything so much easier to digest. Now, what about user reviews? Both platforms have strong ratings, but they appeal to different types of investors. Seeking Alpha has a 4.2-star rating on Trustpilot, with many users praising its in-depth research tools and community features. I dug through many of the online reviews, and people love how much insight they can gain from the articles and quant tools, especially for tracking performance over time. The customer support also gets a lot of shoutouts, which is always nice and a rarity nowadays. Simply Wall Street holds an excellent 4.4-star rating, and the reviews often highlight how approachable it is for beginners. Users often mention the intuitive interface and visuals, saying it helps them make sense of investing without feeling overwhelmed. It seems like a favorite for people who value simplicity but still want solid insights. In the end, both Seeking Alpha and Simply Wall Street offer value in their own way, and the choice depends on what you need most in your investing journey. I want to compare the features side by side so you have a better idea of what I'm talking about. Let's start with what I think are the main features that define each platform. To me, the most unique and useful feature of Seeking Alpha is its quant ratings. If you're like me and appreciate numbers that speak for themselves, this tool is absolutely fantastic. The quant rating system evaluates stocks across key factors like valuation, profitability, growth, and momentum, assigning each a grade from A+ to F. What I love is how this system takes the guesswork out of analysis. Instead of spending hours digging through financial statements or debating whether a stock is worth your attention, Quant Ratings gives you an instant, data-backed assessment. For example, you can quickly see if a stock is undervalued, has strong growth potential, or might face headwinds in the market. What's even better is how intuitive it is. Each rating is broken down by category, so you can drill into the details if you want, or stick to the overall grade for a quick snapshot. I've found it super helpful for narrowing down stocks I want to research further, and it's great for comparing multiple companies side by side. I already briefly mentioned it, but let's talk about Simply Wall Street's Snowflake graph in a little more detail. If you are a visual learner or ever felt overwhelmed by dense financial reports or pages of data, this graph is a breath of fresh air. It takes a company's key financial metrics, specifically the valuation, future growth, past performance, financial health, and dividends, and boils them down into an easy-to-read, 5-pointed snowflake. What I love about this feature is how it gives you an instant overview of a stock's strengths and weaknesses. Each point of the snowflake represents one of those metrics, and the size of the sections reflects how strong or weak the company is in that area. For example, if a company has solid financial health but lacks dividend potential, you'll see that at a glance. While I personally believe it is a little oversimplified, this visual format is perfect for quickly assessing whether a stock is worth exploring further. It isn't a bad starting point for your research. When it comes to stock screeners, both platforms shine in their own way. Seeking Alpha's screener is highly customizable. You can filter stocks based on typical criteria like dividend yield and market cap, but also include their proprietary ratings like Quant, Author, or Wall Street scores. I think this level of detail is a dream for data-driven investors. Simply Wall Street's screener, however, keeps things simpler. You can search for high dividend stocks or undervalued opportunities with just a few clicks. It may not have the same depth as Seeking Alpha's, but it's much easier to use if you're new to stock screening or just want quick results. Both platforms offer solid portfolio management features, but they approach it differently. Seeking Alpha's portfolio alerts are perfect for staying on top of market moves. You get real-time updates on your holdings, whether it's earnings reports, insider trades, or major price changes. It's incredibly customizable, so you're always in the loop without being overwhelmed. Simply Wall Street's portfolio tracker lets you analyze your portfolio's diversification, performance, and risks. I find it super helpful for seeing the big picture, especially if you're managing multiple investments and want to make sure your portfolio is balanced. And that Snowflake graph I mentioned earlier, they create one of your overall portfolio, which I think is great for helping to find weaknesses and make adjustments. Another key difference I found is the community aspect. Seeking Alpha thrives on its diverse contributor base and active discussions. You can follow expert authors, read in-depth analysis, and even engage with other users to get fresh perspectives. It's like having an investment think tank at your fingertips. Simply Wall Street also has a community aspect with commentary from various contributors and perspectives. It is solid, but it can't match the community insights offered by Seeking Alpha. All right, let's talk numbers. Seeking Alpha offers a free basic plan, but if you're serious about investing, you'll want the Alpha Premium plan at $239 per year. Here's the good news. They frequently offer promotions. So check my link in the description to see if there are any current promotions. Simply Wall Street, on the other hand, keeps things budget-friendly. Their free plan is great for casual users, while the premium plan at $10 a month gives you more detailed stock analysis. And for just $20 a month, the unlimited plan removes all restrictions, making it a great choice for tracking multiple portfolios or diving deeper into stock data. The plan is already affordable, in my opinion, and I have an exclusive link in the description that can save you up to 40% on your subscription to Simply Wall Street. So if you decide on going with Simply Wall Street, make sure to grab that discount. So, which one is the winner? Honestly, it depends on what you're looking for. If you love diving deep into data and want a vibrant community to back up your decisions, Seeking Alpha is the way to go. Its quant ratings and in-depth tools are hard to beat if you're after market-beating returns. But if you're someone who values simplicity and visuals, or if you're just starting out, Simply Wall Street offers an experience that's not only beginner-friendly, but also genuinely enjoyable. The Snowflake Analysis alone is worth trying out if you're tired of sifting through spreadsheets. My advice? Start with the free plans on both platforms. That way, you can see which one clicks with your style before committing. All right, that wraps up my Simply Wall Street versus Seeking Alpha comparison. Thanks for watching. If this comparison helped you out, give the video a like and subscribe for more investing insights. I'll see you in the next one, and as always, happy investing.